From a Bitcoin perspective, it points to one of my long-term theses, which is the world is sort of fracturing and getting more dangerous. And in that world, the role of a non-political currency probably becomes more important. Look, all fiat currencies over history have died in spectacular hyperinflation, right? This is a massive thing, right? Trying to detach money from the state and give that sovereignty to people. But look, this is the cross we bear on our way to 20x returns. We're going to see money printing on a quantum that we haven't seen before, because the government can't handle actual deflation. Maybe I'll lay out my very conservative case for $1.5 million Bitcoin in the next 10 years, which I think is a grossly conservative estimate. And this is the model I keep returning to when things feel tense. All you have to do to get to $1.5 million Bitcoin is to, and if you fast forward 10 more years, think of the people who will have watched Bitcoin for 20 years and the positions they'll be at. They'll be running Goldman Sachs, right? Kevin Warsh, the incoming Fed chair, says if you're under 40 Bitcoins, you're gold. No one's saying that was going to be Fed chair until right now.
Mr. Matt Hougan, thank you so much for joining us here today. Matt is the CIO of Bitwise and a recurring guest on the show. We're just very grateful to have you on, Matt, and get your thoughts in this ever-changing environment right now. So thank you for being here.
Well, thanks for having me. I always enjoy these, so I'm glad to be back.
Well, we were just joking offline that we scheduled this, I don't even know, a month or two ago. Boy, has there been a lot that's changed since then, whether it's Venezuela, just the markets in general, obviously just in the last handful of days with, Iran and what's going on there. How has your calculus changed? You tweeted out earlier that it seems like sentiment has shifted. I would love for you to just unpack your thoughts on what's happening right now, just across the board and where you see the puck going.
Yeah, well, let me give you a view on that sentiment question, and then we can zoom out. One of my favorite tells of where we are in the market cycle is how the market reacts to good news. When we're in the depths of a bear market or crypto winter, the market just ignores good news, right? Or you can see, really positive news about for Bitcoin, concern about the debasement trade. The market just doesn't care. So in bear markets, the market ignores good news. In bull markets, the market notices and rewards good news. And that's what I'm starting to see increasingly. So I know this is mostly focused on Bitcoin, but let me talk a little bit outside of Bitcoin, then I'll pull it back. Markets were closed when the US started bombing Iran, and traders pivoted to Hyperliquid, which is a decentralized exchange, because that was the only thing that was open, not just crypto traders, but macro traders broadly. And its price went way up. And that's a sign to me that investors are starting to recognize good news. Again, on Bitcoin specifically, we saw equity markets sort of stabilize. So it got a little bit more risk on. And then people realize that in the wake of most wars, you see significant money printing. That's what we've learned for basically every time there's been conflict in the Middle East. It's been followed by money printing to pay for that conflict. And people started to price that in, I think, into assets like Bitcoin. So when the market is rewarding good news, it tells me that sentiment has shifted and maybe we're out of the worst of the bear market. Doesn't mean we go straight up from here, but it means we're in like an early spring, maybe, where the market is rewarding good things.
What is the just the war in general and what's going on? Do you see, does that change your calculus at all? With any of this stuff, how do you see things? Is it more just like the money printing? Also, I also would like your thoughts just again on maybe, is there something that we don't see, or I'm trying to get everyone's thoughts on, what is it, a BRICS thing that we're trying to, stave off people from using other currency? Where do you kind of see all that headed?
Yeah, so let's go from like certainty down, right? The certainty is the thing that I just mentioned, which is wars are expensive. Missiles are expensive, bombs are expensive, wars are expensive. And this doesn't look like it's going to be a Venezuela type situation. Of course, I'm not a geopolitical analyst. I could be wrong. But I think the market is starting to price in the idea that this could be an expensive war, and that leads to money printing, right? Often wars are actually off balance sheet. They're sort of this separate line item for the US budget, but they can measure, trillions of dollars. Think what the original Iraq war cost us, trillions of dollars back then. Now it would be tens of trillions of dollars. So So, the surest thing is money printing. Beneath the surface is sort of what you're hinting at, which is we've definitely seen some interesting chatter from analysts about the idea that the US wants to disrupt the flow of oil and energy into Russian and Chinese markets and ensure that those operate within the sphere of influence of the US and the US dollar. I think that is probably happening. From a Bitcoin perspective, it points to one of my long-term theses, which is the world is sort of fracturing and getting more dangerous. And in that world, the role of a non-political currency probably becomes more important. If everyone is sort of comfortable with the US dollar, then you don't really need a useful non-political currency. It's only when the
Hmm.
world has the US being very, offensive about the role of the dollar, and then China also wanting to be on the offense for the role of the yuan, and maybe other countries wanting to be the offense on the role of their currency, that you create a space for a non-political currency, which is what Bitcoin is. And so I think it's opening up a space for that asset in the future to play a role in global trade and things like that.
Why is it that war starts and all of a sudden people run back to these government currencies that create the debasement they fund these wars? Like, at what point do people wake up and say, hey, this permissionless, trustless ledger that can't be messed with from no nation? At what point do people wake up and realize maybe that's the thing we should? Is it just time? Is it a generational shift? Is it more black swans? You're like, what is it to you, man?
Yeah, well, I
I don't
actually
know.
think it is. I love that question. I mean, I think it is happening. This is sort of there's a short-term, long-term response in the markets that is classic. So on a small level, what you see is, the initial panic and people sell everything and buy treasuries because they want to be liquid. And that's just a liquidity trade, right? The dollar is not going to collapse over the next 2 weeks. So if I need liquidity, that's a good place to park it. What you've seen historically is that, for instance, Bitcoin tends to do well as people come out of that market, right? In 2020, 2022, when Russia invaded Ukraine, we saw risk assets sell off, but then we also saw Bitcoin enter the 2023, 2024 run. If you go back to the global financial crisis, Bitcoin didn't exist, but people sold gold initially because they wanted to pivot into US treasuries because they were short term and liquid. But then, of course, gold went on a substantial run, and Bitcoin, of course, was born and followed from that. So I do think it happens. I think it's really a liquidity trade. I need to get my hands on liquidity. I'll sell everything that I can just to hold something that's relatively stable. And then over time, people calibrate and think, yeah, these decentralized worlds are more important. Bitcoin is more important in this fractured world than it is in a relatively stable one. And I think people do recognize that.
So I'm trying to unpack this so it makes sense. And it's one of those things, like I was reading The Sovereign Individual again, and and that book predicted a lot of what we're going through. And in there it's like, hey, if we find this nationless money, this digital money that people can't mess with, then it'll be this thing that just defunds things. Maybe it takes a little bit of time, I guess, but that could just happen overnight where people don't have to pay taxes or skirting around the government. And then Bitcoin and what's happening, the ETFs, and a lot of it's, well, we're putting the regulation, we're putting it back into this regulation. And I think all of us long term, because it's this game theory where corporations need Bitcoin, families, states need Bitcoin, everyone needs Bitcoin, but you have this weird dynamic of where I think a lot of us are like, well, Bitcoin's going to defund a lot of this, the wars, endless wars, kind of bringing this whole thing full circle. Like, where's like the chasm crossed in that sense of, where do we go from like, okay, this legacy world that we're in is just gone, and we have this new world that's not funding the wars anymore? I don't know if that makes sense, but it feels like I'm just reading the book and I'm just like, man, like I feel like we're missing the boat a little bit. Like, we're all doing it, like we're all guilty of this, but it's like, how do we cross that chasm?
Yeah, I know what you mean exactly. I think the thing I try to keep in mind is that it doesn't have to be binary. It can be constrained. So if you think of something like the Fed printing money and abusing the US dollar, absent something like Bitcoin, they can do that with no restraints, right?
Mm,
They can just
yeah,
go ahead because where are you going to go? You're going to go to the euro, which is dying. You're going to go to currency in Latin America. Like, you're not going to rotate into pesos or loonies. Those are even
right.
worse, right? So as long as it's the cleanest dirty shirt, you're okay. What happens as Bitcoin becomes more accepted and more grown is you have this easier and easier, more reliable default. And that puts a constraint on the Fed. So in the optimistic view of the world, in the hopeful view of the world, um, Bitcoin is almost never makes that complete takeover because it constrains the sort of traditional system in terms of how much it can abuse the market. I don't know if that's the world we'll get to, but look, all fiat currencies over history have died in spectacular
Yeah.
hyperinflation, right? Which I know is like part of the Bitcoin idea, but it's actually bad. Like living through that is generally
Yeah.
bad for society.
Not
You
good.
don't want that. And so the hope is that it's not binary, that Bitcoin gets strong enough that it constrains the abuse of the dollar. And I think that's the chasm, right? It just needs to get
Hmm.
strong enough to constrain it. And I think that's true, in Bitcoin and in other decentralized markets that crypto is creating.
Yeah, I know. I know that, one could argue that, and I know there's a lot of people that are in that world of, hey, if the best it does is just constrain governments and it keeps this check and balance, that that might be the world we are in someday. What do you think just your thought on, it seems like everything over the last year or two has kind of led up to, hey, we're going to see this really big rip in the markets, and and it didn't come like a lot of us expected. We had, all-time highs, we had things happen, but just not like how everyone thought it would, I guess. What did everyone get wrong? What do we all get wrong and miss here, Matt?
Yeah, I'll tell you what I got wrong because I got it wrong as well. What I got wrong is I was focused on the new money coming into the market, which is institutional money, corporate money, government money, and it indeed did come into the market, right? ETFs and corporations bought $75 billion of Bitcoin in 2025. What I underweighted was that the majority of Bitcoin is held by people who have held it for a while, and they were really afraid of the 4-year cycle, which and they sold about $100 billion of Bitcoin, right? And that was why Bitcoin went down last year, because 100 billion is more than 75 billion. And it's easy to be frustrated with those people, but you also have to recognize that they're human. They may have bought Bitcoin when it was $10 and they turned $10,000 into $10 million. And they have lived through a 4-year cycle before and they've seen it go down 75%. And they're thinking to themselves, do I really want to take all of that risk? And so they didn't exit the market, but they sold a portion of their Bitcoin either directly or by writing covered calls against it. And I think that's what we missed. We were all focused on institutions coming in, financial advisors, family offices, endowments, pensions. And sure enough, Abu Dhabi bought Bitcoin and Harvard bought Bitcoin and Morgan Stanley is running 500 miles an hour at Bitcoin. And all of that happened. But we forgot that like 70% of Bitcoin is owned by individuals. And some small fraction of those, maybe 10%, decided they wanted to sell or trim their holdings. And the institutional money can only come in so fast. And I think that was the difference. Ultimately, the professional money wins out because it's so large. There's so
Hmm.
many trillions. But it's like a bucket, right? It matters both how much water is coming into the bucket and how much water is going out. And because of the 4-year cycle, I think people took a little bit of money out of the bottom of the bucket, and that's why prices retract.
I know the Jane Street discovery, Justin Belcher's article that went viral, talking about this 10 a.m. dump. I know it was kind of rumored for a little while. People were talking about it, people were kind of noticing it. Then all of a sudden it became this thing, and there's lawsuits and exposés on it and stuff like that. I know, Bitwise, it was like, hey, don't say anything, you guys, because you guys are in bed with them or whatever. So I'd love for you to unpack what was the truths, the falsities, at least what you guys see from your end, and just explain. Again, some of this manipulation, where it is, where it isn't, type of thing.
Yeah, for sure. I guess first, because it was raised by Justin, let me address the like Bitwise Jane Street relationship. Jane Street is one of 9 authorized participants on our ETF. They're an authorized participant on virtually every ETF in the world. So there are 8,000 of them. And Jane Street is an authorized participant on most. They're one of 9 for our Bitcoin ETF. And I think they're an AP on some of our other ETFs. All that means is that they can create or redeem shares to arbitrage the price versus the net asset value. So with an ETF, you want the price to reflect the value of the Bitcoin it holds. And the process of creating and redeeming shares is done by these authorized participants. The reason, to make it clear, the reason GBTC traded at premiums and discounts is because no one could create or redeem shares. When you create or redeem shares, you get rid of that premium and discount. Bitwise doesn't pay Jane Street. They're like a service provider. And we don't have a special relationship with Jane Street that we don't have with these other 8 authorized participants. Just part of the parcel. All right. So with that stated, the Jane Street accusation, there are 3 different things that people say, and I think it's helpful to separate those 3 things because things get confused if you lump them all together, and maybe you lose the signal. The first is the lawsuit that Jane Street had insider information about Terra Luna and profited from its collapse. That's what the lawsuit is. I have no idea, right? Like we didn't own Terra Luna. I have no special insight. It's a lawsuit. It will work its way through court. Like we will see, but I have no opinion on that. The second one is that Jane Street looks at leverage positions in the crypto futures market and creates cascading liquidations by pushing Bitcoin down to price levels that cause the market to cascade. You've been in this market for a while. We've all seen cascading liquidations in the leverage futures market on weekends and nights in particular when the markets are liquid. Does Jane Street do this? I actually have no idea on that either. Right. I don't have any special view, but that's something that's like bigger than Jane Street. It's sort of everyone in crypto. Then there's the last piece, which is there's this somehow some nexus between 10 a.m. and ETFs, and Jane Street is a market maker that creates some sort of arbitrage profit. And even though I've been in ETFs for 20 years and was the former CEO of ETF.com and have banged my head against the wall trying to figure out how something like this could be true, there's actually just no mechanism for that to turn into profit for Jane Street that I can figure out. And there is absolutely nothing about 10 a.m. that matters in ETF land. The times that matter in ETF land are 2 p.m. and 4 p.m. 2 p.m. is usually when you have to submit creations. 4 p.m. is when they happen. 10 a.m. is the same as 10:15 a.m. and 10:30 a.m. It's like not a time. So I think that one is just categorically untrue because there's no mechanism for profit. If you think about how ETFs work, there's no way to tie a specific activity to making a profit. And so I just think that one's untrue. So the other 2, again, I have no special insight. The ETF specific one, I have special insight because I know how ETFs work, and there's just not a mechanism.
Is there a way, because again, I know everyone goes back to the FTX, Sam Bankman-Fried was there, and a bunch of the people that were there came from, Jane Street or whatever. Is there a way, because this is always like the age-old question, goes back to the ETFs like gold and silver. How do you audit something when no one, got to trust middlemen, and we don't even know where the gold and silver is at, or what FTX was doing as well? Is there a way that you could have that type of manipulation, or people doing, just straight up funny games, or, paper where it's like, oh, or, there's digits in your account, but it's not really there? Is that possible in that realm?
So, Bitwise publishes proof of reserves, right? So you can go on chain and see where our Bitcoin is for our ETF. So that's as good as you can get in terms of proving that we own what you can. Not everyone does that. It would be fraud to do it the other way, right? So it would be fraud for an ETF to say it holds Bitcoin and not hold Bitcoin. And it would have to get past the SEC auditors like KPMG and others. I don't think that it happens, but I also think because we're in a trust but verify world in crypto, that other ETF issuers should publish their proof of reserves. It's not that hard, right? Just do it. And so then you remove that question for everyone. So I wish that everyone would do that. They don't. And I don't think there is abject fraud. The businesses are too big to put at risk for something like that. But I do think it would be best practice for the industry to do proof of reserves, and Bitwise has been a leader in that since day one.
Yeah, and it goes back to Justin's piece. I know Justin is a great guy, and I think the point of all this is that when do we cross this chasm of like when do people realize this? 20 years ago, when you were starting in the industry, like you didn't have this level of like transparency, and like Matt's able to just jump on even and talk about these things, or someone else running ETFs. Like it just didn't happen. So like now, like the younger generation under 45 can't take the lack of transparency and opaqueness anymore. And going back to your point of like, it should be proof of reserves, like all this, and it just happens in time. Kind of like what you're saying. I'm of that belief too. Like I wish we could all do this overnight and it would just happen. But Justin does a great work, and it's like not everything is going to be correct, but it opens up these questions so then we can have the dialogue and debate, because this wasn't happening for decades, which is so frustrating. It leads to all the bullshit we're seeing.
It's so important. And I'll tell you from the inside perspective that when you want to do something like proof of reserves, add a traditional asset manager, you have to blow through a lot of headwind, like lawyers telling you not to, others telling you not to, not for any reason that they can point to, but just because it's not normal. So the reason I think most people haven't done it is if you get asked like 6 times not to do it, and each time you have to have a conversation and push them to identify what they're actually worried about, it can just be too hard, right? Like it's just a pain. Yes. So I think but you're absolutely right. We're in a new era. Also, blockchains enable this transparency, right? Push button easy. You can't really do that with gold, right? Maybe you could have like a video in a vault, but who knows if it's really yours or whatever.
Like an Epstein camera prison style video, right?
That's right. You can, and you can update it every day, which is what we do. Like everyone should do this. This is the future. So I agree, and I love people who push for the truth. And crypto is definitely full of histories of things that people said were unlikely that turned out to be true. Right? Yeah. So it's always good to be pushing on these things, because there's definitely been FTX and BlockFi and Celsius, and you can keep going, right? There's a long list. So we definitely should be in favor of these kind of dialogues. That's why I posted a response to Justin, and why I admire him for pushing on it.
All right, real talk for a second. We all know health insurance is basically a fiat system of healthcare. The biggest debauchery there is. It's expensive, confusing. Somehow you still end up paying hundreds of dollars for a Band-Aid. We moved to crowd sharing almost 5 years ago. It's the best decision we ever made. Instead of sending your money to the insurance company's black hole, you join a like-minded community that directly funds each other's medical bills. Simple, transparent, way cheaper. And that difference you save, you can invest in Bitcoin. It's an amazing win-win. And look, we're part of the Bitcoin community because we believe in freedom, decentralization. Crowd Health brings that same mindset to healthcare. You choose your doctor, you pay in cash, and the community's got your back when the big bills hit. No networks, no middlemen, no bureaucrats trying to approve your care, just people helping people the way it should be. You make decisions about your health. That's as sovereign as it gets. So if you're ready to take the orange pill for your health, this open enrollment, go to Join Crowd Health to get started for $99 for your first 3 months using code Brandon at joincrowdhealth.com. That's joincrowdhealth.com, code Brandon. Crowd Health is not insurance. Opt out. Take your power back. This is how we win. Generational wealth doesn't happen by accident. Bitcoin fixed the money, but it didn't fix the system of protecting and passing it on. Bitcoiners, we have to live in 2 different worlds, idealism versus pragmatism. That's where Meanwhile comes in. It's the world's first Bitcoin-denominated life insurance company, regulated in Bermuda and built entirely by Bitcoiners for Bitcoiners. With Meanwhile, long-term holders can grow and protect their Bitcoin wealth through tax-free policy loans, no repayment obligation, no margin call risk, while making inheritance simple and secure and entirely in Bitcoin. It's about sovereignty, stewardship, and building a legacy that lasts centuries. Because if Bitcoin is forever, your plan should be too. Learn more and sign up with code 4QPBWC at meanwhile.bm. That's meanwhile.bm, code 4QPBWC, or just sign up, the link in the description below. Going back to the price and sentiment, and just coming to what we were saying earlier, it feels like, and I think you might have tweeted this too, just going back to, I feel like the sentiment shifted, et cetera, but is it that a bottom might be forming-ish? I mean, could we go down to, 50 or, I don't know, something like that? Like it may be, right? But like, it feels like with the whales selling the last couple of years and a lot of what's going on, it feels like, we're scooping out a bottom at least. Like, how do you see things playing out right now?
Yeah, I strongly think that is true. I always tell people it's like you have to imagine a scale where you put a rock on the scale and it sort of tilts, and you put a rock and it tilts a little more, and you put a rock, and eventually you put enough rocks that it hits the ground, and that's your bottom. I think there's lots of indications that we're close to a bottom. right? So some of the indications are whales stopped selling, right? Actually, at the end of the year, they became net purchasers for large wallets and long-term holders. That's important. The futures basis shrunk to almost a vanishing level. And what that tells you is that there is no more space for people to paper sell their Bitcoin through option overlay strategies, which also has been one of the ways that people have been selling. So that's another important indicator. And then outside of Bitcoin, we've just gotten so much positive news about crypto and stablecoins and tokenization, which all bleeds into Bitcoin as well. So I do think we're in this process of bottoming. I actually feel very optimistic about where crypto is going. I think it's going to catch up to gold. I think it's going to be a good end of the year. Could it fall another 20%? Of course, but I'm for the first time seeing the sentiment shift and seeing people get much more constructive on the space.
What are your thoughts on the halving cycle? Because now, I mean, we're rapidly coming up. It's like 2 years away now. We're already halfway through this halving cycle. What are your thoughts on the 4-year cycle and the halving? Because it's still a debate. Even like it's still a debate, obviously, of like, does the 4-year cycle exist? You know, the halving cycle. How do you see that playing a role? You know, now and going forward.
Yeah, look, one of my lessons from the last year is that the 4-year cycle has a strong psychological grip on investors and is therefore reflexive. In other words, the reason I think crypto went down primarily was people were afraid of the 4-year cycle repeating. So they created it by being worried about that. That's probably still intact. People are probably looking ahead to 2027 and figuring it will be a positive year for Bitcoin. So I don't think the 4-year cycle is as strong as it used to be. I don't think the halving cycle is as strong as it used to be because the quantity of Bitcoin is lower that's being sucked out of the supply. But these things still matter. They matter from a behavioral perspective. And on the halving front, they matter on a supply perspective, right? There still is a reasonable amount of Bitcoin coming out of the ground every day that the market has to absorb. And when that falls in half, it's a lot easier for prices to go up. So I think those are also tailwinds for us, right? We're now in almost the tailwind phase of the 4-year cycle. We're in the tailwind phase of the halving cycle. We have a tailwind on a regulatory perspective. There's just a lot of positive things to point towards.
What are your thoughts on the just like, Tether to stable coins? I always laugh because, Tether's always it's like Tether always gets the blame, good and bad, in the sense of like, it, price goes up and it's like, oh, it's only because of Tether. Yeah, it's the only reason, things are going up. But then like when things go down, it's all of a sudden Tether disappears. It's not Tether's fault. So I find that kind of funny. But so maybe thoughts on that, but also maybe more to the point of, do you think there's any credence to Bitcoin being, I'll just say, quote unquote, suppressed a little bit? Like the administration, all of a sudden there's like a bunch of focus on, Bitcoin, and we're going to be the Bitcoin capital, and, mine your Bitcoins here. And then clearly they want to get treasuries out there. That's been, the last 10, 15 years, treasury purchases have gone down around the world. So they're trying to figure out, obviously, different ways to get treasuries out there. Well, stable coins are an awesome way to do that. Do you lend any credence to the fact that, hey, maybe Bitcoin's been pushed aside a little bit because we're trying to do this stable coin thing and push treasuries out there in this, short to medium term?
Yeah, that's an interesting question. I align with the soft version of Cathie Wood's thesis, which is that if you thought Bitcoin was going to be used for payments in parts of the world in a relatively near term, stablecoins have clearly co-opted that use case, at least in the short term. And that probably incrementally is a negative headwind for Bitcoin. On the regulatory and policy front, I think crypto is just honestly sort of too impatient, is my general view. Like, right, I remember as soon as the election took place, people were frustrated that Bitcoin wasn't literally the first thing the administration did. It had to wait a week for something else to clear before we got things like the strategic reserve. And that's because the world is complex, right? There's a lot going on. And if you look at what the administration has done, from a regulatory perspective on establishing the strategic reserve and at least not selling its Bitcoin, it is now true that it's focused on the Clarity Act and focused on growing stablecoins and tokenization. But I think you just have to think that they can only do one thing at a time. I don't think that means that other things like working on establishing the strategic Bitcoin reserve as a law are off the table. I think it's just they're focused on this thing. Maybe one more piece of context. In the early days when the administration was working on like the strategic Bitcoin reserve, the stablecoin people were frustrated that they weren't focused on stablecoins, right? And then when they were working on the Genius Act, which was stablecoin focused, the tokenization people and the DeFi people were frustrated that they weren't working on tokenization and DeFi. I think the right framing is they can only do one thing, and they did a little bit of Bitcoin, and then they did stable coins, and now they're doing tokenization. And I actually suspect they'll get back to Bitcoin at the end. Maybe I'm too optimistic, but I think it's just staying focused on one thing at a time.
Yeah, and going back to, I think it was a year ago, when we had spoke, you said, or one of the times we spoke, or one of the first times we spoke, it was you had said that, and it stays with me in the sense of old habits die hard, old relationships die hard too, right? So I mean, this is going back to the younger crowd, maybe 45 and under crowd, is looking for a new system in many ways, and the impatience of, hey, these things, they just take time. Time converts more than reason, and there's a lot of entrenched relationships and people that you gotta fight through that. It's going to take a while. So
that's exactly right. And you need younger generations to get into positions of power.
Yeah.
I mean, I would note that Kevin Warsh, the incoming Fed chair, says if you're under 40 Bitcoins, you're gold. No one's saying that was going to be Fed chair until right now.
No.
Right?
No.
Because 10 years ago, they needed to be like in a serious enough position to both take Bitcoin seriously and then have a chance at being Fed chair 10 years later. Right. And that's like a specific generation, which is Kevin Warsh's generation. But that's an indication of how these things change. And then if you fast forward 10 more years, think of the people who will have watched Bitcoin for 20 years and the positions they'll be in. They'll be running Goldman Sachs, right? That may be scary to Bitcoin people, but that sort of demographic rise is happening across the ecosystem. And I think Kevin Warsh is a really good example of that, and important.
Yeah, it's funny because there was like the next two things I was asked you, like you just kind of teed off on both of them a little bit. It was, the Fed had Kevin Warsh and your thoughts there, but in maybe like the big print that way, I feel like for months and months and months, people have been like, okay, like Trump's got to juice, I mean, whether it's Trump or whoever it is, you figure any president's going to juice, right before the midterms. He doesn't want to be a lame duck. When is this going to happen? Now we got wars going on. Maybe they're trying to clear this out of the way. Just very fascinating.
Yeah, I'll give my thoughts on Kevin Warsh, who I should note, since in the interest of Jane Street-like disclosure, Kevin Warsh is an investor in Bitwise. I don't know him personally, but he is. Yeah. He's part of the cap table. I think the market for Bitcoin initially reacted negatively to Warsh's nomination, and the reason for that is it was a debate between Hassett and Warsh. And between the two of them, Warsh is more constrained on the view of what the Fed's balance sheet should be. Actually, he's more aligned with what Bitcoiners think about the world, which is the Fed shouldn't have this giant runaway balance sheet, that it's a corruption of the institution, right? That's effectively his view. And the funny thing is, because that they like, Bitcoiners almost don't want that view to be at the Fed. They want the Fed to be like this runaway train, right? Because that's good for Bitcoin.
Yeah.
So there's an irony there that he'll want it to be more constrained. But I think the market is coming around to realize something important, which is Warsh is actually dovish on interest rates. He's a big believer in the AI productivity boom. He's very convincing to his peers. I think he will do a strong job of dramatically lowering interest rates, because I think that's what the Trump administration wants to see, and that aligns with his view on AI and productivity. And then on this other piece where he wants to constrain the Fed's balance sheet, I think he'll face real challenges because of the sort of financing needs of the US government, right? We have this debt that rolls over, we're accumulating more deficit. So even if he wants to dramatically shrink that, I think the pace at which he's able to do that is going to be somewhat constrained. So I think he's going to be actually a great Fed chair for America. I don't think we're going to get sort of runaway Bernanke style treatment of the Federal Reserve. That's probably a good thing. But he won't be able to aggressively shrink that market because of an element of effectively fiscal dominance that he's running into. So I think he's become sort of a net catalyst, because it will cut interest rates. and he'll be constrained on his ability to shrink the balance sheet. And I think it'll end up being positive for Bitcoin.
I mentioned to you earlier that I was talking to Luke Groman, and he was basically alluding to that the Fed balance sheet would AI where I'm going. So I should give you a context of like AI, just like the deflation that's going to happen because of that. We were seeing it with Block. So I love your thoughts on some of this, and it feels like it's a shot across the bow for companies everywhere. It's like, well, wait, what? You cut a bunch of people and now your stock goes up. So, and he was like, yeah. And like you could see a Fed balance sheet at 40 trillion, 50 trillion eventually. Cause like you're going to have to print over. How are you going to marry this? So I would love your thoughts on just kind of what you've been seeing the last week. It's just wild.
They are wild. Yeah. A couple crazy things every day. Look, we know what the Fed does when we face deflationary forces, right? China joined the WTO, good or bad, not talking about that, but them joining the WTO was deflationary for us in the US because we were able to import very cheap goods. And what did we do to respond? We printed money and raised the debt to fill that hole. The economy can't handle deflation, right? In deflation, consumption collapses, and that's very challenging for the economy. So the government's response to significant deflation is going to be to print, to paper it over, and that leads to asset price inflation. And I think that's the inevitable outcome if AI is as disruptive as we're seeing from Block and from others, right? So I think if it is a strong deflationary force, we're going to see money printing on a quantum that we haven't seen before because the government can't handle actual deflation. And that's going to be positive for all scarce assets. Bitcoin, I think gold's going higher. I think other scarce assets are going higher because I do think that a deflationary force is real, and I think the printing response will be equally real.
And we go back to this like 10-year thing, and I know you've kind of talked about over time as well. And so how do people stay sane when the price isn't matching? Because we're talking about the Fed, and these might not be good for Bitcoin price in the short term or even medium term, crossing this chasm of you can see where the future is going to be, but it's not happening tomorrow. It's just not, whether we like it or not. So like, what are you, when you look at things or model Bitcoin, is it, the power law, which the power law basically says like 10 years from now, like, hey, volatility will be, lower, a lot lower. So a lot of institutions will be coming in where the price movements are way higher, but the volatility and the change, percentage of change might be much lower. How do you see, what models do you look at, but also what do you see, or how do people stay sane as we kind of grind through this in the coming years?
Yeah. Well, the numbers are so big. I think that's the major reason I stay sane. 60,000, 50,000, 70,000, who cares? I think maybe I'll lay out my very conservative case for $1.5 million Bitcoin in the next 10 years, which I think is a grossly conservative estimate. And this is the model I keep returning to when things feel tense. All you have to do to get to $1.5 million Bitcoin is to have the store of value market grow the way it's been growing for the last 20 years. And then for Bitcoin to take its market share from roughly 7% today to 25% in 10 years. So in 2036, will Bitcoin be 25% of the store of value market? If it is, it'll be $1.5 million. The important thing about that model that I think Bitcoiners miss is that the store of value market is growing exceptionally fast. When the gold ETF launched in 2004, the entire gold market was $2.5 trillion, right? So that was the TAM. Today, the gold market is $30 trillion. In 10 years, the store of value market will be $60 trillion or whatever, right? It's going to continue to grow. Every sign suggests it's continuing to grow. Monetary debasement, debt, deficits, etc. So that's going to continue to grow. And then all Bitcoin needs to do to 20x is to take its market share from 7 to 25%, which when you think about the fact that it's gone from 0 to 7% effectively over the last 10 years, that's the hardest yards. 7 to 25 is not crazy at all, right? 10 years into the future, of 10 years of Morgan Stanley offering exposure to Bitcoin, 10 years of central banks studying Bitcoin, 10 years of sovereign owning Bitcoin, decreasing supply. It's just hard for me not to imagine it getting to that. And so if you're dealing with that, if you're thinking like your base case on a conservative basis is at 20x in 10 years, then who cares on this volatility, right? Like it's painful for investors. It's painful for me if I check my portfolio. But I try to keep that sort of what I think of as a really conservative case for the next 10 years in mind. And from that vantage point, this all looks like an interesting buying opportunity. And that's what keeps me sane. Of course, we look at a million statistics and a million models, and we have weekly CIO meetings, we have dashboards with all the economic statistics and things like that. I'm happy to talk about all that, but the real thing is the simple thing, which is, it'll get to 1.5 million Bitcoin in 10 years if it just takes 25% of the market. And I think that's a very high probability bet.
And that's, again, the beauty of Bitcoin, because not everyone is Matt Hougan or, at an ETF or at some, a Wall Street company or whatever, right? It's for the pleb at the end of the day. And that's where, like you said, keep the main thing the main thing. That's what,
That's
focus
right.
on government printing currency. They've all gone to zero. And Bitcoin, if it can incredibly enforce its supply to stay decentralized and secure, then hey, guys, that's the two ingredients you need to know up into the right.
That's right. That's exactly right. Do you think governments are going to spend less money in the future?
Right.
I mean, it's like the crazy. No, no one, zero people, right?
Yep.
And at that point, it just becomes some version of math, I think.
Yeah. Yeah.
So that keeps me pretty grounded.
Yeah. So in saying that, it feels like at some point along this road of the next, 5, 10, 15 years, whatever it is, where does nation state FOMO, we talked about with the institutions a little bit, where are some maybe signals you look for, or maybe some things that spark nation state FOMO? And you see, I mean, again, whether it's the wars or things going on, we saw the SWIFT thing exactly 4 years ago happen, and freezing the reserves, Russian reserves. And then now we have stuff going on, sanctions left and right. It feels like at some point nations wake up, and maybe that's what this war is about right now a little bit, right? Like them going outside the dollar, and we're trying to constrain that, but it feels like the system's falling apart. America's trying to do more and more, and it's actually having less and less effect because there's more tools out there, more escape hatches. So, where do you see this kind of sparking off the nation state?
Yeah, it's funny. I have this general view that everyone arrives at Bitcoin at the same cadence, which is it takes like 8 to 10 encounters to go from skeptic to fully converted. And the difference in speed at which people arrive is the difference in which they encounter it. So like a retail investor might encounter it and then spend the next 8 days going deep into a rabbit hole and emerge a Bitcoiner. A financial advisor may encounter it and then do a quarterly meeting for 2 years, 8 quarters, and they emerge a Bitcoiner. My nation state view, the reason I raised this, and that's actually a fact from Bitwise, our average client meets with us 8 times before they allocate. Nation states look at it like once every year.
Yeah.
Right. And so I just think they're going to take 8 years. I mean, as I mentioned, we did 4 consultations with nation states. They had different reasons of thinking about it. Some of them were worried about their neighbors who had allocated to it. Does it give them a strategic advantage? Do they need to match that advantage? Others were interested in Bitcoin as part of the store of value market. Do they really want to be 100% gold, or do they want to have some diversified exposure? Others were earlier in their journey and just were learning about it and had started asking classic FUD questions. But to me, it's almost a matter of time. And for what it's worth, you can work back from nation states to all the other categories of institutions. Why are we seeing a few sovereign wealth funds encounter it? Because they think about it like every 6 months. Why are we seeing a few endowments encounter it? Because they think about it every quarter and they're further along. I think everyone just takes this period. Just some people move faster than others. Could there be a catalyst that really accelerates it? For sure. Like I do think the US seizing Russia's treasury assets was a turning point in the world in terms of what assets central banks will hold and the future of the dollar. And I think there's no putting that genie back. Could there be another one of those that points people towards Bitcoin? I don't know what it is objectively, but I wouldn't have told you that it would be the U.S. seizing Russia's assets that would spark the giant gold move either. I only can see that in retrospect.
Yeah, that's a great point. What are your thoughts on the decoupling of Bitcoin with traditional, the risk on, risk off, and it really being deemed, and I think we touched on this earlier a little bit, but everyone kind of running away from Bitcoin? It's the most liquid thing. It's kind of like the best smoke alarm, here, snuffing out liquidity. But this, nationless, permissionless, trustless, asset that people could be running to because it's off the system. Like, where do you see this decoupling going forward, and when do you think maybe it speeds up, or we're going to be here for a while where it's kind of coupled with tech stocks or the Nasdaq? Like, what do you see when you kind of look at all that?
Yeah, first I should say that I'm somewhat skeptical of the narrative that is truly coupled. I'll give you two
Mm,
reasons for that. When we look at the data, we look at 90-day correlations. So how is Bitcoin related to tech stocks or US equities over a quarter long period? Because we're long-term oriented. And when you do that, the statistics just tell you that it's low to medium correlated. So it's not highly correlated. It moves aligned with tech stocks, maybe half the time. So it's actually statistically it's lower than the media reports. The media will seize on that narrative during moments where there are big moves. I've seen the chart about Bitcoin and software stocks. Um, it strikes me as a chart crime. There are two different y-axes there, and one is like measured in tens of thousands of dollars, and one is measured in like $10 increments. And if you actually post the charts without two y-axes, they look very different. So I think the story is a little bit overblown, but it's had an increased correlation to tech stocks versus historical. I, I think that will naturally resolve. We've seen these periods in the past. Coming out of COVID, also had an increased correlation to equities when people were just buying everything and money printing, and Bitcoin was ripping, and so was GameStop. Look, I think two things will pass, but I would encourage people to just take a second beat on it. It's not that highly correlated. It is more correlated than it was in the past. But I don't think that says anything about the long-term relationship between the two.
what are your thoughts on treasury companies right now? I mean, obviously they've been getting torched pretty good, the last year or whatever call it. Do you think there's a rush? I've talked to a few people, and they said, you think of sentiment, right? Like, look, I mean, like we, touch 70 or whatever it is, and people are like, oh yeah, like, let's go, we're back. It feels like, man, we get to like 90 or 100 again in Bitcoin price, people are going to be, and I talked to Checkmate the other day, and he was like, man, we break the all-time high, what do critics have to left to stand on at that point? And as a chartist and an analyst, and one of the best, on-chain analysts out there, it's just like, it's got room to run, it's got the sentiment, people are like, what do the critics stand on anymore? All that being said, do you think that the treasury companies, do you think they get a really strong bid as well? What do you see when you kind of look across that horizon going forward?
Yeah, I actually think the market's going to be more discerning. So I think strong bid, yes, for the right digital asset treasury companies. But I would say in the mania, at peak DAT mania, everything with a plan was getting massive multiples to MNAV, regardless of underlying cost, underlying structure, equity dilution from the founders, et cetera. And I think when you come out of that bubble, people will reward well-run, well-structured entities significantly. And I'm not sure poorly run, poorly structured entities will get that same bid, right? So I think it'll be more differentiated than it was in the past. There are entities that are in very strong positions that haven't taken on significant debt, that have huge Bitcoin holdings, that are doing interesting things with them. MicroStrategy is a great example of that at this point in its journey. I think it will be rewarded. And then there are some companies that have large debt overhangs with fixed dates. And that
Mm.
is just risky with a volatile asset, right? Like, you don't want that with a volatile asset. And so I think they may not catch the bid. So my answer is sort of split. Yes, for some, no for others. And I think that's the way the market should be, right? It should reward well-run entities. I don't think the trade is over. I do think it will come back, but I'm hopeful that it will be supportive of the better run versions of those entities, as opposed to the ones that are more challenged from a structural perspective.
Do you think that, again, some expanded thoughts on Sailor and MicroStrategy? Obviously, they just had Strategy World, or are they going to become a bank? And I know Sailor said no, but right now, I mean, like, they keep upping their, the stretch, what you can get on it. I mean, it kind of are a bank in a way. Some people, like, I would love your thoughts on, like, do you think that they're a top of funnel, like, for Bitcoin, and people eventually get into Bitcoin and they're sucking in a lot of like the legacy money, the older money, like we talked about with like the boomer class? Or is it, just the existing system? And so I would love your thoughts on all of this.
That's a really interesting question. I do think it's an interesting company right now. They're really focused on Stretch, and I think Stretch is a very interesting product. I think it's one of those products that I think people struggle to fully understand. Right? It seems to many people too good to be true, and can they underwrite the underlying risk? I think of it as I don't know if I don't. The bank is almost right. It's somewhere between like a bank and a permanent capital hedge fund vehicle,
Mm.
that's engaged in interesting financial engineering of Bitcoin exposures. I think it's one of the more fascinating companies in the market. I'm optimistic for it. I do think Stretch is a very interesting vehicle for what it's worth, and I think it's going to bring a lot of people into that ecosystem, because it's hard to find 11% yields, right, with that kind of NAV like stability, which of course has risk. It has multiple risks that are a little bit hard to underwrite, and that's why I don't think everyone is comfortable with it. I understand that, but I look. I think they're going to be systematically important to Bitcoin for as far as my eye can see.
There's one thing more important than Bitcoin: the time you have and the people and relationships you build. In a world full of noise, the real signal is meeting with other Bitcoiners IRL, finding Bitcoin-only events, connecting face-to-face, and supporting the circular economy through Bitcoin-friendly merchants around the world. That's exactly what Club Orange is built for. Build your circle. Support Bitcoin-only companies. The only place in the world you can find all that in one spot is the Club Orange app on iOS or Android. Go to cluborange.org, what used to be the Orange Pill app, or scan the code here. Everything you are learning in this episode is completely moot and does not matter if you hold Bitcoin and are still leaving it on an exchange or sharing keys and your KYC information with a third party. This is your wake-up call now. You are only self-sovereign if you alone hold the keys to your wealth. 100% self-custody sounds daunting at first. Believe me, I lost 2 years of massive gains over a decade ago because I was worried about taking the few minutes it took to understand self-custody. And that's exactly why you need to talk to my friends, Tony Yazbek and his team at the Bitcoin Way. We just interviewed Tony recently, has over 80,000 views, an overwhelming response. People love his story and the simplicity he shares of how easy it is to custody and take ownership of the greatest money we've ever seen. They'll train you to do it right the first time. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. Quit sitting on your hands like I did and get started today. Again, that's thebitcoinway.com/BRANDON. Do you have, I would love your thought on just some of the FUD. Like I've been joking with people lately about the, you heard for 15 years energy usage, Bitcoin's boiling the oceans and, on and on and on. And then all of a sudden, like last year or two, there was almost nothing about energy usage in Bitcoin because all of a sudden AI centers, data centers are here. We need, energy usage good. So that's, my conspiracy tinfoil hat is, well, yeah, I mean, the powers that be can control you with AI, or at least theoretically, and then they can't control you with Bitcoin. So that's why it's weird, it's the signals in not being said almost anymore in a way. So, but now, you have, all of a sudden quantum stuff has come up, Epstein stuff. We've seen this like pop up out of nowhere. So the energy usage thing was gone and now it's somewhere else. Do you have any idea where the FUD emanates from? Because again, like I look at it as like these are nation state level, like for years, and you're just able to like pour back into that. But again, that's just my opinion. I'm just being in the industry for 10 years and just like, where's this coming from? Do you have thoughts on that, or like where it kind of emanates from at the end of the day? Because it's fascinating to me.
Interesting question. Look, I think there's some FUD that is worth discussing. Like I'm actually not against the push that Nick Carter has made to raise quantum awareness in the Bitcoin community. That's like something we have to deal with. It's very complex to deal with it. We will deal with it, but it's not a bad thing to focus on. It's not like if we ignored it for 20 years, it would be a thing, right? Like that's right. That's true. It's like eat healthy so you don't have a heart attack. You're not going to have a heart attack tomorrow, but you should probably at least start thinking about it and maybe eat more oatmeal. I sort of think of that as the quantum. So I'm not sure that that's cleanly FUD. I think that's just some people are more hyper protective than others, and they're pushing that forward.
Time frame.
The Epstein thing,
mismatch of time frames too, right? Like
I think that's exactly right.
Right, and like that's.
Yeah, but I separate that from like boiling the oceans or Epstein or Tether or some other FUDs that I think are just malintent. Look, Bitcoin has a lot of people who hate it, right?
Say the
I
quiet
mean,
part out loud. Yeah.
yeah, it just
Uh,
does. And so anytime they can attach something to it, I think Epstein is a great example. You can say
mhm.
Epstein and chocolate milk, and everyone's suddenly like, "Oh, you shouldn't go near chocolate milk." Um, right? And so I think because people hate it, you can attach lots of things to it, and just society has continually tried to do that. The good thing about being in Bitcoin is you've lived through so many of these things that you're easy to detect what's just complete nonsense and what you have to worry about. I mean, didn't the Financial Times wrote that Bitcoin is worth zero a few months ago? 10 years ago, that would have freaked out the
Oh boy.
market. Now we're like, oh my, this poor person. They just can't get their head around it. So I think it's that. I think it's that so many people hate it. They're going to attach everything they can to it, and this won't be the end. There'll be new FUD. Make no mistake, there will be new FUD for Bitcoin.
Is it, again, because like, is it just like this own personal gauntlet you have to go through, like this humility test or something like that? Because it's weird because you have like the cypherpunks, and you've got like just your everyday Joe Blow pleb for years, was just like telling everyone, hey, telling whoever they could, hey, this is great, you got to look at this, you got to get it. And then now, conversely, the last couple of years, you have we have ETFs, we have the president of the United States, the leader of the free world, all like, hey, Bitcoin, yeah, we're doing this thing. And it seems like you can't win either way. Like whether the biggest people in the world talk about it or the smallest guy in the world, this is like, you don't win either way, Matt. Like I don't understand where is it just time converts more than reason, I guess.
That's definitely true. Yeah, I think it's that. Look, we are winning. We're in a better place than we were, 15 years ago. A lot more people believe in it, but it is it can be exhausting, right? It can be exhausting. The perpetual just inability to address it for what it is and treat it rationally. Um, it always does make me feel good when the critics seem crazier than the adherents. And I'm not sure, like there was a while early in Bitcoin where the people who were supporting of it seemed like they were really outside. Now it's the critics that say things that just sound absurd, right? Like it sounds absurd that the Financial Times is saying Bitcoin's going to zero, that this reporter knows more than the Abu Dhabi Sovereign Wealth Fund or Stan Druckenmiller or Ray Dalio or Kevin Warsh or the Harvard Endowment or Morgan Stanley or you or me. Like it's crazy. Yeah, but look, this is the cross we bear on our way to 20x returns.
Yeah, so true. And it is funny too, because like I've said this as well too, right? With like if you asked me 20 years ago, would the richest guy in the world or whatever, we'd be talking like conspiracy theories. And not that any of the conspiracy theories are wrong or right in and of themselves, but this wasn't even in the public lexicon. So you and I kind of talked about this earlier too. Like the Jane Street thing, like transparency, none of this existed. Like the average person couldn't ask questions. You just had to believe what was on the news. So like directionally, society is going the right way. Like you said, we're winning. The information is getting out there, education, but it does just take time. And I think that's where it's important to keep it all in check or in perspective.
Yeah. Well, this is a massive thing, right? Trying to detach money from the state and give that sovereignty to people. This is not a trivial task, right?
Yes.
This is a major task, and we've made enormous progress, and we'll continue to.
What are your thoughts on because I believe that you had said that Bitcoin would be less volatile than NVIDIA going forward. And we kind of talked about the power law and just like, again, where you have some of the guys that are like, hey, it's going to be in the 2030s. This is when it gets, a lot less volatile. The prices are a lot bigger. This is when institutions really want to come in. They want to see the volatility come down, et cetera. But we're already seeing it, right? We've seen the curve dampen with the volatility. And, like it or not, again, there's a lot of people that are like, well, it's not that volatile. I'm going to jump into something else. I'm going to go into NVIDIA. I'm going to go into something else. I'm going to, for a lot of people out there are hurting. And so they're, hey, can I roll the dice here and go grab something that's going to make me a big return? So, because again, you can make the case that it hurts Bitcoin, that people are like, you know what? It's not, it's boomer coin, like, or whatever, right? Like, so anyway, I would love your thoughts.
I think that's very true. I think we've lost a portion of the attention economy to AI. And look, I'm as interested in AI as the next person, right? I use it all the time. Take some Claude. Claude just published some new courses that I think our whole research team is going to use them. That's perfectly fine. But I do think it will become less volatile And I would add the thing that's not intuitive to people, which is there's less risk. If you talk about something like Nvidia or OpenAI, um, there's enormous risk in there, right? Like traditionally, chip markets get oversupplied and then prices come down. The chip cycle is notoriously cyclical. Could we see that in AI chips? We absolutely could. Um, these large LLMs are phenomenal businesses, but the open source models are getting really good. Could they significantly disrupt the economics of that? They absolutely could. AI needs almost infinite power to scale. We're not really able to build that power. We'll be able to build AI data centers in space. I have no idea, but apparently we need to if we're going to get the kind of growth. Like huge risks. Bitcoin just produces blocks every 10 minutes, and it just seems so simple. So I think both its volatility will shrink because more different investors are coming into the market, but I think also you could argue objectively its volatility is lower because it's just doing what it does, and the trends that you're betting on are things that are almost baked in. You're betting on the world getting more digital. You're betting on governments printing money, and you're betting on young people getting older. Those are pretty good bets.
Yeah.
And if all of those line up, I think
safe.
it's great for Bitcoin. I don't know. It seems a lot simpler to me than many other things.
And it goes back to like the Trump thing I was mentioning. Like it doesn't matter which way there's always like you can't win this way, you can't win that way. It was just it's one of those things where if it's too complicated, people, they don't get it because most of us can't understand something that's rocket science. But then if it's like too simplistic in the sense of like, well, Bitcoin, like we just outlined, it's going to do better. But it's like, well, that seems too easy, Matt. Like they're too simple. And it's like, okay, where do we win in here? Where does the common sense thing win?
Oh, that's totally right. Well, I've often said the biggest alpha in all markets is behavioral alpha. And I think the behavioral alpha in Bitcoin is huge because so many people first encountered it from a negative media story. And so they have this bias against it. And it's the conversion of that bias that causes the price to go up over time. But there are very few investments which face the same behavioral challenge as Bitcoin. And I think that's where a lot of the opportunity comes from. If it didn't have that behavioral overhang, the price would already be substantially higher. And you as an investor get to sort of take advantage of that by knowing these people will follow on that journey over time. They will eventually get there.
And it's just an awesome way to wrap. And like you said earlier, I mean, it's the greatest game. It's going to take a while. Separating money and state is not that's not an overnight thing. So it's gonna take a little bit.
That's right.
Anything we missed? Anything you want to hit before we get out of here?
No, I think that was it. This is a really exciting time for Bitcoin. These moments where you're coming out of bear markets and you start to feel the sentiment shift. Again, doesn't guarantee we go straight up from here, but if you've been in this market before, sort of this feeling. You get that tingling sense, and that can be pretty exciting. So I'm excited to see how the rest of the year goes.
Well, as always, I appreciate you having you on. I'll, if you want to follow Matt on X everywhere, go to, Bitwise or whatever it is, check out what he's doing. I'll link to all that, and look forward to having you on later in the year. I'm sure there's going to be nothing to talk about at all, Matt. So it's
for sure. We'll do it.
Thanks, Matt.
All right.
If you like that episode, then you're going to love the playlist we put together for you with our most recent podcast with the top Bitcoiners, sound money, liberty advocates in the world. Go check those out here. We'll see you inside. You're going to love them.